Well, staying with the beauty industry, that seems to be in the spotlight today. We've got none other than the tennis great Serena Williams, who's in a joint venture with the Glamm Group, which is a prominent name in the personal care startup space, Win Beauty, and they're expected to capitalize on the growth in the US market. Let's understand a little bit more. My colleague Sumita Karir caught up with Darpan Sanghvi, the group founder and CEO of the Glamm Group, who spoke about this JV as well as what the outlook is in terms of profitability and IPO plans for the Glamm Group. Listen in.
Darpan, thanks very much for joining us here on ET Now. This is a first for any D2C startup to foray into the United States with a consumer product launch and creating a mainstream global brand, and you're doing that with none other than Serena Williams. So congratulations on that. Tell us about the fine print of this partnership and what are the conversations like with Serena on the partnership? What's the kind of revenue sharing model you'll be operating on? And what does the overall product offering looks like?
Thank you, Sumita. Thanks for having me over here. We're super excited. It's a big day. We're announcing today our joint venture with the iconic Serena Williams, an inspiration to all of us across the world. And together, we've created an incredible cosmetics makeup line and brand called Win Beauty by Serena Williams. We launched that today. Our launch is in partnership with Ulta, the largest beauty retailer of the US. We launch across 685 offline stores of Ulta, coast to coast, nationwide, pan America. So big day for us. This is a true joint venture between Serena and Glamm Group, where we both have created this brand together.
All right, Darpan. So I'm going to be asking you about your upcoming IPO. But first, let me ask you about in terms of challenges, consumer preferences, especially in the Western markets, the United States as a market for beauty business, considering it's a bustling beauty business over there. How are you really seeing these two markets, the GCC and US, from a competition perspective? Speaking of US, especially when you have many celebrity influencers like the Jenners themselves. So what is your competitive advantage going to be there? And secondly, is it going to be more retail heavy, unlike India where it's more e-commerce led?
Very different markets, but let's start with the US, right? You're right. The US already has a lot of beauty brands, but it's incredible. The US creates new brands every year. And why are new brands still getting built in the US? When there are already so many brands. The reason is if you create a strong brand proposition with a differentiated and effective product benefit and are able to crack the right go-to-market distribution, you have access to customer and unprecedented scale. Here with a single retailer, you can build a few $100 million brand. What's very important is that your product proposition is very strong, which in our case is what we're calling high performance, clean, high performance, skin loving makeup products here. Very authentic and credible, given that it's Win Beauty by Serena Williams, something that Serena truly stands for. She's been, she's probably the most high performance woman that's ever lived, ever on the planet. And it's her philosophy that's gone in every aspect of the product here. And with that, we know we've created a very compelling product differentiation. We've created a very compelling product, a brand point of view. And we hope consumers will love it. And the partnership with Ulta gives us access to the consumers on day one. So we think the brand and product are very exciting, very different from what's out there today. If you've seen the products, they're fantastic. The chartreuse color that Serena chose for the products, which is the color of the tennis ball, it's absolutely gorgeous. It totally stands apart. The products come with what we call the truly unstoppable Hydra complex, which gives you 72 hours of hydration even after you take the products off. So it's things like that we feel is going to make the product really stand out, and hopefully consumers give us a shot, and once they try it and they love it, they keep coming back again and again.
Right, so your strategy has been content to commerce, and that's been one of the key advantages that you've had, at least in India, over your competitors. And something, are you looking at deploying it to work for your international markets, for your foray into the international markets as well? And what's going to be your strategy then for the US market?
I think there are a lot of learnings that we're going to take from our content creator commerce journey in India. I think a lot of the tech and data enabled tools and approach that we have with regards how we build our social media presence in the United States and how we grow traffic to our DTC in the United States. But you have to, understand that our GTM in the United States is very different from India. In the United States, our focus is the retail partnership with Alta, which becomes the primary go-to-market distribution strategy. And DTC builds on top of that. In India, it was the reverse, where DTC was predominant, and retail was a much smaller component of that. And there is a reason for it. Structurally, it's very different. In the US, a single retailer, you can build a few $100 million brand with the help of a single retailer and DTC. In India, because retail is so unorganized and fragmented, you don't have that leverage with a single retailer. So building distribution offline retail in India is very hard, which is why DTC becomes the way to go. While in the US, if you're able to crack a great retailer to give you the kind of presence that we've got, your GTM is sorted. So there is that difference in the way the Indian go-to-market is versus the United States go-to-market is. The learnings, the tech and the data tools and the learnings of content creator commerce will be leveraged in the US for our social media growth, for our creator commerce in the US, and to drive top of the funnel to our DTC in the US. So in India, it's actually 80-20 now. 80% is online, 20% is offline. So India for us is predominantly online. In the US, it is going to be predominantly offline as we start. I think we will learn over the next 3 to 4 to 5 months to see how big we can scale DTC. We are very optimistic that DTC will become fairly large in the US. How large? I think time will tell. Again, I don't want to put a number out there and then a few months later realize that we were off. We're doing the US for the first time. We would like we've got the foundation for an amazing scale and an amazing launch with the Alta partnership here. And within a quarter, we should be able to know exactly what the split will be. However, the way India is digital first, the US will be offline first. How big DTC will be, we will find out soon enough.
Also, now shifting focus on the India market, do throw some light on profitability, considering beauty business in the country has grown by leaps and bounds in the past 2 years with the entry of multiple brands. Are you profitable yet?
So our focus in FY24 has been profitability. If you look at our journey, FY21, we were barely 49 crores in revenue. I mean, that was 3 years ago. We were 49 crores in revenue. We're tiny. FY22, we grew to 210 crores in revenue. FY23, 640 crores in revenue. FY24 for us was that was unprecedented growth, right? Going from 49 crores to 640 crores in the span from FY21 to FY23. So incredible growth there. FY24, we focused on getting to profitability, which meant cutting back on marketing, on discounts, which meant cutting back on fixed costs, optimizing the team and the overheads, whose results we're hopefully going to now see in FY25, where we hope for FY25 to be a profitable year for us, which again is very important as we think about the IPO in Diwali of 2025. So consolidation was what we focused on in FY24, and hopefully FY25 will see the fruits of that effort, where we can then see FY25 being a profitable year for us.
All right, so you're looking at an IPO during the Diwali of FY25, just a couple of months to go for that big IPO. I want to understand how you're looking at meeting the deadline and what's your take on the IPOs of 2024. There's been a sea change in terms of valuations overall as compared to the IPOs of 2021, isn't it?
So I think India is one of the best places in the world for a consumer brand company to list in. I think markets really appreciate if you're a consumer brand at scale here in India. So I think the Indian IPO markets are absolutely fantastic to list if you're ready, right, to list. And what do I mean by being ready to list? I think you have to be profitable. I think one big difference from when you were speaking earlier in 2021 IPOs to now is we all know we have to be profitable before we list. And so we've all reworked our business models and our cost structures to ensure that we are profitable sooner rather than later. And the other thing is you have to be predictable. Now, I think what's going to be very interesting for us, Sumita, is just look at us as a company when we go to the markets. We're going to be the only company with a global consumer brand in the portfolio, in addition to leading Indian brands. We're going to be a company that's going to have a mix of geographies which have different characteristics. So India is going to give you that amazing growth trajectory, right? Great growth characteristics. While a market like the US is going to give you a margin profile that you will not find in India. In the US, we're selling products for $30. In India, I'm going to sell products for 300 rupees. And so the margin profiles are very, and so I think that mix, we're looking at international being about 25 to 35% of our revenues. And I think the markets will find this mix very interesting of high growth economies, higher margin economies, global brands, local brands going into the other global markets. So I think this could be something very interesting if we execute well over the next 12 to 18 months.
So you're saying that it's going to work to your advantage because you have an operating leverage when it comes to the US markets that will give you a margin profile. In fact, this is something that the government's also been speaking about Indian startups, the need for Indian startups to go global, and the fact that we can become the largest global startup ecosystem in the world, and that the Indian startups can cater to the needs of global markets. On that point, I want to understand from you, you've entered the US, you've entered the GCC. What are the next markets, next couple of geographies that you're going to be focusing on?
So, Sumita, our focus for the next 12 months with Win Beauty by Serena Williams is the United States. So we have to make it a big success in the US, which is the home market for Win Beauty by Serena Williams. We make it a big success there, and then you go into international markets. International markets typically would be, you've got Europe, you have the Middle East, you have Australia and Southeast Asia. Those would be the key international markets for beauty. There are a few large retailers in all of these markets, which when you have a successful brand with a big retailer in the US, it becomes very easy to translate into those markets as well. So we've already laid the foundation in the Middle East organically. We've organically launched a brand in the US and built now our first distribution in the US as well. Next 12 months, our focus will be just these two markets to consolidate and grow and be a big success here. And 12 months post that, you will see us entering into these other markets that I just spoke about.
All right, so one final question, Darpan. The beauty business, of course, has grown by leaps and bounds in the past couple of years. You are seeing individuals launching their own beauty brands, businesses doing that, and of course, celebrities and influencers getting into this space as well. But isn't that really impacting the margins of businesses who are already operating in it? What about you?
So one good thing with what has happened on the funding winter that happened over the last couple of years is that nobody is spending foolishly, right? So nobody is giving crazy discounts. Nobody's going and spending crazy money on marketing. It's become a more level playing field because everybody's focused on profitability. Doesn't matter whether you're funded or not, you have to be profitable here. So I think then that comes down to really having your basics and your foundation right, having a great product, great brand point of view, your differentiation, and then your retention for your consumers, and then your growth hacks to get them to become your ambassadors. So I think it comes down to your fundamentals and execution. I think, look, there's a lot of room for a lot of brands. What is a brand? A brand is something that appeals to a consumer's emotion. And there are so many diverse sets of consumers. There's so many niches out there, and they have so many different emotions. And so if you are able to tap into one of those emotions with a product that genuinely makes a difference to the customer, you can build a brand. The scale of the brand might will depend upon how large that audience was, how large that emotion you're tapping into, and the problem that you're solving for the consumer is. So I don't see a challenge with multiple brands coming in. I think brands that have their fundamentals right will continue to do well, and how big they become will depend upon their strategy and execution.